following is a technical analysis on the Walt Disney Company, a company of the consumer cyclical sector in media diversification here off the monthly interval. The much larger picture here and present before us is an expansive, large capitalization enterprise just encumbered by a prodigious burden of a massive amount of debt. And within their overall profit margins on examination prove to be slender and relying upon the triumphs of the Star Wars and Marvel franchises in an outcome that is gradually waning in frequency. You diminish even just a medium of their revenue, and their fixed expenditures continue unabated, while the prospect of any residual profit evaporates entirely. Notably, their EPS have yet to recover since the conclusion of the COVID pandemic. The company's persistent display of unforced errors, controversies, serves to perpetually erode their revenue, resulting in lasting repercussions on their financial standing. And I stand before you, the technical analysis of the entire stock here, talk about just a massive key generational support level, one that I've yet to have seen since the Hasbro stock that I updated and the Verizon AT&T talk about long-term levels. And this is the mother of all key monster inflection points off the 1984 reactionary lows, cuts right through the 2009 crash. And here we are just trading right at that $88.54 spot price, right off of almost a decade support there zone, off the 86.08 price support, coinciding with the primary reactionary uptrend line off the 84 lows there, with the 200 monthly moving average hovering in and up above. And you talk about a triple 10 out of 10 level of support. This is it right here. This is a big just key inflection point, generational, multi-decade support. I cannot stress how pivotal this inflection point. If I could give it a scale on 11 of 10, this would be an 11 out of 10 scale strength of support here. And we'll zoom in here right to some of these key inflection points. And I want to take you to just damaging momentum indicators that have already crashed below their zero line thresholds here. And upon zooming in around this key inflection point, you have a pretty significant volume at price profile around this range, with just a huge steep volume profile gap down below there, whereas you are trading levels that have not been seen since 2014. This is 10 years ago, darn near 10 years coming up here in just a few months. It'll be 10 years since we've seen that spot price of $88, since really even the COVID crash there. And I believe a strong monthly candle close below that key inflection point ought to issue a massive monthly interval dimension sell signal of all levels there, which would put in a very strong sell signal, especially when you have just a massive air pocket down below here with hardly any support zones below there, gearing up to that first target 43.34 price support, which would be another 42% crash there. So just a massive inflection point. If you, I can't stress enough, it's the chart alone just amazes the structure of where this stock is trading at the current moment. If you're long-term, dollar cost average, you believe Walt Disney and Fed will begin, and there will be no recession, and the Fed's going to stop hiking rates. This is where you'd buy here. This is exactly where you'd buy. I could give you some key levels down below. I could make an argument for maybe that flexion point of 67.91, call it minor support there. But again, maybe even potentially off the COVID lows here, call it 78.47. Those would be the only two key inflection points, that you could potentially buy at in dollar cost average. And bringing the average down for your shares. So we'll see what happens. Just a monumental inflection point. Just amazing to watch something like this play out in the next few months ahead of time. And upon zooming you in underneath the hood to the daily interval, we have this primary reactionary uptrend line off the December 2022 reactionary lows, with a continuous restructuring of these reactionary lows right across the board there. Call it pretty darn significant daily support there, with divergent low, positive, and bullish divergences at least on two of the technical momentum indicators, with just even exaggerated bullish divergence in the stochastics 1033 there. But again, that's a pretty significant price zone where we have the 236 fibs retracement, call it 94.70 price resistance up above, with a primary parabolic downtrend line honing in up above here. with again, I'd like to see a nice clean breakout amongst that key inflection point, whereas you have the 50-day moving average hovering in just right above it, hugging it there. So bull traders, long traders, they need to defend this price support, this primary uptrend line really at all costs to avert a potential sell signal there. And then you have that next price target where bears, short sellers, they want to see that sell signal go, potential back test, and a re-challenging of the 0 fibs retracement, call it 84.20 price support off the 2022 reactionary low there, the all-time low, just slightly hitting down. And if we take that level out, we ended up cracking that level, then there's going to be, I believe, in my personal opinion, a stronger wave of selling where you'll potentially burn off these bullish and or positive divergences entirely. And then you'll go in with already damaging zero line threshold momentum indicators there. You will go potentially on to revisit the COVID crash lows. There's bull traders, long traders. They could set some. You could set some stops here below dollar cost average. Begin your scale in process. This is an aggressive long trade setup. Aggressive in the sense of the structure of this stock and how bad has it's gone down. But just the rhythmic price action in it has been pretty bearish there, where your bounces off this primary reactionary uptrend line off the 2021 September reactionary highs right here. The bounces are just have been a lot lower. The counter trend rallies have not come back to retest and back test that key inflection point. Whereas we rallied up here back in 2022 of August, never reoccurred to even back test that key inflection point, and again ended up just coming just shy of it, and then we finally back tested, but were rejected impulsively, violently off that primary reactionary downtrend line there, and resulted in a pretty substantial move to the downside again. Massive crashes off that key inflection point. Whereas again, you had another snapback and or counter trend rally, and it once again came short to tagging that primary downtrend line once again. So the bounces are getting smaller, the bounces are getting weaker there. So again, support is support though until broken. And bull traders and or long traders need to successfully defend this key inflection point. Look for a solid daily candle close right up above, snapping that parabolic primary downtrend line and the 50-day moving average to usher in a buy signal there, and then hone in onto that first target at 94.70, which would be a 6.7% in gains. Also retesting the dual line of resistance in the 200-day moving average up to the 382 fibs retracement, call it 188 price resistance for 14% in gains, and then ultimately up to the 107.65 price resistance, actually breaking out of that primary downtrend line. And again, bull traders, long traders, they want to see that key inflection point go. They want to see that inflection point taken out there on a solid daily candle close level above to begin a bullish, continuous momentum to the upside and a renewed bull rally to the upside. So we'll see what happens. I'll keep you updated if I see any more significance here in the charts.